It's difficult to pinpoint Donald Trump's motivations a month after the U.S. and Israeli strikes against Iran began, but it's clear he's keeping an eye on the oil markets. A single word or social media post from the U.S. president about his plans typically triggered sharp price swings, as investors reacted to signs that the conflict might escalate or end. However, in recent days, traders appear to have become increasingly skeptical of the veracity of his comments. Before February 28, when the strikes against Iran began, the price of oil was around $72 per barrel. Last week, on March 19, the price peaked at $118 per barrel, and as of Friday afternoon, it was hovering just below $112, well above the pre-war price. Here are a few moments from the past month when Trump and the markets seemed to bounce off each other, with varying consequences. Use the arrow to advance to the next slide. Jonathan Raymond, an investment manager at Quilter Cheviot, says energy prices have become a proxy for broader geopolitical and economic risks, rising sharply when Trump's rhetoric becomes more aggressive and falling when his statements soften. He says markets are rightly sensitive to these signals, given the significant economic risks associated with rising oil prices. Investors are trying to assess the real uncertainty, he says. Markets may appear nervous or confused, but they are actually managing event-related risks in real time, and oil is at the very center of this process. However, it can be difficult for investors to figure out how to trade, especially given that some of Trump's comments appear aimed more at influencing oil prices than informing policy, says Brian Scheitel of the Bahnsen Group. As the saying goes, the first casualty of war is truth. I suspect some of the rhetoric surrounding productive negotiations, and vice versa, is largely focused on simply impacting the price of oil. On Thursday, minutes after U.S. stock markets suffered their biggest drop since the war with Iran, Trump declared that negotiations with Iran were going very well, and postponed military strikes on Iran's energy infrastructure until at least April 6th. But oil prices continued to rise. Jane Foley, head of foreign exchange strategy at Rabobank, says the market reaction is becoming increasingly muted due to the massive gap between Trump's assurances and Tehran's lack of response. Given the current situation, many investors do not see the conflict ending anytime soon, and markets remain uneasy. Russ Mould, chief investment officer at AJ Bell, says markets have also become accustomed to Trump frequently changing his stance when signs of political, stock market, or economic troubles emerge. There's a certain skepticism, if not outright cynicism, brewing around the edges.
Subscribe to the channel, like and share this video with your friends to stay updated. See you in the next episodes.